how to read currency pairs. Folks, by the end of watching this video, you will have a good understanding of how to read currency pairs when trading. More importantly, how to use this lesson by the end of watching this very video. This is the second video of the beginner series, so sit back, relax, get a notebook and a pen, and let's jump straight into the video. When trading, particularly in Forex, you are trading two currencies that are paired up against each other. Where profit is actually made is by finding one that is stronger than the other, or vice versa, one that is weaker than its counterpart, and using that to your advantage. This, folks, is known as relative value. This is matching strong versus weak, or weak versus strong, and using that to your advantage. And sometimes the bias may last for weeks, months on end, without having to change this core principle. And that is simply looking for value where value can be found. Very similar to riding a bike, you're going to stumble from left to right while figuring out what relative value is. But finding relative value is understanding the underlying factor of what influences a currency. More importantly, where it's going in 3 to 6 months. And I'm not going to give you everything in this video. I want this to be an activity and an exercise you can implement while watching this video. So grab your notebook and your pen, write down your favorite currency. If you're completely new, I'm going to give you one. I'm going to give you Euro USD. Euro USD is one of the most popular and most traded currency pairs in the market. It is also the most liquid, so the moves are a lot smaller, but you also have more of a chance of finding the right direction. More importantly, how long you can trade that for. The bias doesn't often change. If you're a bull and you're buying Euro USD, that's probably going to last for a few months. If you're a bear within reason and you're selling Euro USD, it's probably going to last for months within reason too. So because we're trading currencies and we do have them paired against each other, I want you to go ahead and write down on your notebook Euro/USD. Go ahead and write that down. Now, for a second, think about what actually moves a currency. Think of it, if you were the euro or the dollar, what would be the reason that you move? Would you trade higher on optimism? Would you trade higher on good data? Would you trade higher on the officials of that country, the officials of those respective central banks commenting positively? Why would you trade higher if you were a currency? Why would you trade higher? Currencies reflect how good an economy is doing. If the Eurozone is doing great, that means you're going to have an optimistic European Central Bank. If you have an optimistic European Central Bank, you're going to have a higher euro. Same thing goes for the dollar. If you have a good US economy, if you have an optimistic Federal Reserve, which is a central bank in America, if you have an optimistic president in the United States, if you have optimistic events that are happening in the US, if everything is looking good, you're going to have a strong dollar. I want you to go ahead and write that down. The reality, folks, is that if you choose the direction and you understand within reason what relative value is, that bias will not change for at least 3 to 6 months. Truth behold, I've been selling the euro dollar for the whole year, and it's currently November by the time I'm shooting this video. So that means for 11 months, I've had the exact same bias. But how have I come to that conclusion? I've looked at the euro, I've looked at the dollar, and I've asked myself, what are the underlying factors for these currencies? Once I've come to the conclusion that the Eurozone is extremely under pressure right now, and the dollar, one, is the world's global reserve currency, it is the alternative in times of uncertainty. Two, you got a central bank, the Federal Reserve, which has been raising interest rates in America, the most aggressive that they ever have in history. I'd also like to remind you that where the dollar is now is a reflection of what they have done. It's a reflection of what has happened. It's not an indication of what will happen, what is going to happen in the next 3 to 6 months. That's our job to go ahead and find out. So on your piece of paper in front of you, you have the euro, you have the dollar, and I hope you've written down the sentence which I suggested, which was understanding the underlying factors why a currency is either gaining or losing strength. You want to go ahead and figure that out. So hopefully in front of you right now, you have the euro slash the dollar, and also why you, if you were that particular currency, why you would be gaining or losing strength in this particular time. Currencies will fluctuate. You will have patches of good data, patches of bad data, but it's important for us to figure out what relative value is. So in this instance, folks, I understand that the European Central Bank has risen rates well above 4%. I know that. I know the United States has risen interest rates to well above 5% right now. And I understand the interest rate differential that they have. But I also understand how much pressure the ECB is on. Why do I know this? The data. I'm looking at GDP, I'm looking at retail sales, I'm looking at how inflation in the Eurozone is doing and how well they're doing with interest rates at these levels. So then I ask myself the basic question: should I be buying or selling a currency? It is as simple as that. Now, you don't need to be a macro genius to figure this out. If there's good data, would you be buying or selling a currency? If there's bad data, would you be buying or selling a currency? It is as easy as that, but it's more important that you keep tabs of this. There's no point coming to the market every single day looking for a bias if you haven't asked yourself a simple question: should I be buying or selling the euro? What's the data telling me? I hate to break it to you, but drawing lines on the chart is not gonna affect the market. You're not gonna find out what is actually happening globally by drawing a bunch of lines on the chart. However, what I would rather you do is spend 15 to 20 minutes at max once a week figuring out, should you be buying or selling a currency? It is that simple, folks. So I'm not going to stretch this video out too long. I'm going to give you some homework and we'll check back in video number 3 of this beginner series. Go ahead and write down 5 points of what's happening in the Eurozone economy right now. Go ahead and do your research. And go ahead and write down 5 points on what's happening in the United States economy right now and summarize in one sentence whether you'd simply be buying the euro or selling the euro. Ultimately, the dollar is king. Cash is king. You got to choose whether you're buying or selling. That's your job. It shouldn't take you more than 30 minutes at max to go ahead and figure that out. And I'll check back with you in video number 3 of the beginner series. Hope you enjoyed this video, folks. Do like, comment, and share this to a friend if they've never heard of what relative value is. And more importantly, subscribe to the channel and stay tuned for video number 3 of the beginner series. Let's go.